Hello, it's Robert Miner with Dynamic Traders Group with our DT Reports YouTube video update for Saturday, November 24th. It's going to be a relatively short update because of the Thanksgiving holiday weekend here in the U.S., but I'm going to focus today just on the ES and the immediate position and potential trade strategies early next week for the stock indexes. We're going to take a look at the probable trend position of the stock indexes today within the context of Elliott wave. So it'll be a little bit of an Elliott wave lesson, but also what potential immediate trade strategies there are for early next week. First thing we want to look at is this decline from the September high to the October low. It's best counted in Elliott wave terms as a 5-wave decline. And a 5-wave impulse trend should not complete a correction. In other words, the October 29th low should not have completed a corrective low. It should be what we'd call in Elliott wave terms a wave 1 or an A, followed by a corrective advance, a wave 2 or a B, and then a continuation of the bear trend probably to a new low and potentially substantially lower, because a wave 3 RC down should be typically it'd be comparable to the wave 1 or A in time and price. So several weeks decline once we break this October 29th low, potentially to much lower prices. So that's the first thing we look at. The second thing we look at, possible that this November 7th high completed the corrective advance. Well, it took the form of an ABC correction. It was a little short in time from what we typically anticipate for a correction, as I've described in prior YouTube videos, but we'll see now, as of the end of this past week, why more than likely this is a completed ABC wave 2 or B correction. And that's pretty critical information, because if that's the case, then any advance that we see in the stock indexes should just be a minor correction within the higher time frame bear trend. So now we've established that more than likely the bear trend is, or the higher time frame trend is bearish. October should not be a corrective low. We've established that more than likely this November 7th high completed an ABC correction, which we call a wave 2 or B, and that would mean that the higher time frame bear trend has resumed. Eventually, it should make a new low. Where are we at as of the end of last week? There's a couple pieces of key information. Number one, the daily momentums have declined into what we call dual look back oversold. And typically, once the daily momentums reach dual look back oversold, we're within a bar or two of completing in this case, it'd be a daily low because we're looking at daily data, and that would be followed by at least a 3 to 5 day daily trend sideways to up. And then because the higher time frame trend should be bearish, that should be a corrective rally before a resumption of the bear trend. Now, if we also look at the pattern of the decline off the November 7th low, it clearly appears to be 5-wave. Well, that's another hint that the higher time frame trend bear trend has resumed from the November 7th high. Just below Friday's low, and of course Friday was only a half a trading day, but it didn't make a new low and a new closing low, is the 127, 162% external retracements of what I got labeled as a wave 4, if this is a wave 4. And that would be the ideal target to complete this, what we consider a daily low. Of course, that just falls right above the swing low of October 29th. So we want to be aware of that. But the key piece of information here is the daily momentum's dual look back overbought. This appears to be an impulsive trend down, confirming this as a corrective high, and any rally should be 3 to 5 day corrections against the bear trend. Here's a look at the 240-minute data. And again, if this is a 1, 2, 3, 4, then we should be very near completing this series down from the November 7th high. So that's a pretty important piece of information to have, because more than likely it would be complete early next week. And let me go back to the daily. You can see I've got a thick green line against out from the close from last Wednesday. If we were to make a daily close above 2649 in the ES and the comparable closes on the other stock indexes, it would reverse our daily momentums and indicate that that daily low is complete. If the stock index did continue much lower and even took out this October low, then we would be trailing that closing reversal price above the prior day's close. For each new lower day or lower close that we had. But even if we decline below what I got as this wave 5 target zone, we're still dual look back oversold with the daily momentum. So we're very near that daily low. This would just be the ideal target zone for that low. And if we take a look at the other indexes, here's the NQ, basically in the same position. Friday did not make a new low in the NQ, so it's a potential that we would early next week make a new low. This is the 127, 162% external retracement of this potential wave 4. But if we do make a new low, don't get too bearish because our daily momentums are dual look back oversold, and we're in a time and a price position as of last Tuesday's low actually to even have completed that daily low. That was a 100% alternate time projection of the last decline, and it tagged the 100% alternate price projection of this decline as well. So we're real near a daily low, regardless of which stock index that we look at. This is the YM, and again, the YM looks a lot like the ES. And our daily momentums are dual look back oversold. As of Friday, it did reach the ideal end of wave 5 price target zone, if indeed this is a little wave 4 here. So we just need to close above Wednesday's close to indicate that this daily low is complete. But that would be a tradable low. But keep in mind, more than likely, the higher time frame trend is bearish, and any rally is likely just to be a 3 to 5 day or so correction against the bear trend. So the real setup and the best trade from my point of view in the days ahead is going to be following a corrective advance. We'll try to identify the end of that correction, which then should be followed by a resumption of the bear trend to a new low. So that's what we're looking at early next week. Take care. Have a fantastic week. Be back with you next Saturday for sure with another YouTube update. And I hope you subscribe to this YouTube channel and check out our DT reports at dynamictraders.com. Take care.